All right, welcome to this weekend market analysis. Well, we are not really going to waste much time in this review. We have quite a lot to discuss in this weekend market analysis. So let's just go straight to the point. First, looking into the Forex factory economical calendar, we have Monday being bank holiday for both the American dollar and the Canadian dollar, so we expect some slow price market behavior on Monday because of this bank holiday, especially that coming from the American dollar axis. Usually once we have bank holiday from America, price action for that day tends to be very slow. All right, so all the high impact news announcements are from Wednesday to Thursday. Friday, nothing. So essentially, we have high impact news announcement for Wednesday and Thursday. You need to pay special attention to the interest rate announcement for both the Canadian dollar, right, and the euro. You want to give them special attention as the interest rate numbers will be released. All right, now let's look into the charts and quickly conduct our review, and we'll be starting with those pairs that we took before the market closed that are actually not doing well right now. Let's see what's going on. The first one is the sterling pounds against the Japanese yen, and this is still a 1 hour time frame. As you can see, price actually came nicely to the downside. As soon as you took that entry, we cash out some profit right there, and immediately price bounced back up. Now sitting around that area. Well, this price reaction is not just common to the pairs that we took some entries on Friday. It is also common to other pairs, as we are going to be seeing. This is the Friday type of unusual market volatility, okay, and just a typical example why some traders may want to avoid trading on Friday. But trust me, Fridays are usually very profitable, irrespective of the fact that we had this experience here. We're not going to stop trading on Fridays, okay? All right, now let's analyze this pair. In the weekly time frame, you will clearly see that the price is reacting off a key area here, which previously acted as a resistance there, support around that zone, and now price came all the way trading around that problematic zone. So this is an area that price has a high probability of making some rejection. Last week close, you can also see that we got some form of a reversal candle, all right, pin bar right there, giving us the hint that the bears might be able to drive price back down again, maybe to this level of support or even further to the downside. So with this hint, the bears may have control for this week. Looking into the daily time frame, some confusion here. Well, we are going to be considering this as a pullback. All right, that candle here, it is not a pin bar that I would like to trade. I am just going to be because everything still looks bearish. Everything still points to the downside. I would have been worried if this trend line here, this daily trend line, was hit, but it wasn't hit, and that is why I am not really worried. I am still very optimistic the price will come back down in the sterling pounds against the Japanese yen. In the forward time frame, we got a falling trend line right here. That trend line here, well, it was quite obvious, and in fact we took the trade quite late. Price, the entry was just around that support zone, that's the previous swing low, so it was quite late, a little bit late. All right, well, let's just keep the trade. There is nothing we can do about this now, but the technical analysis shows the price will still go back down. The only thing that we may want to do is I don't even know how many of you are still holding this trade, because some brokers will widen their spread as the market was about to close last week Friday. Take out some entries right here. You can close that trade out for you. I don't know how many of you have gotten your stop loss hit because of widened spread. All right, if your trade is still there, then maybe we can trail our stop loss to regional location. All right, as the market opens, then as the spread begins to tighten back, we can return our stop loss to that level. Okay. Similarly, the sterling pounds against the Swiss franc, many of you may not have survived this as well because of a widened spread caused as the market was about to close. Some brokers would have maybe taken you out of that trade, but if you haven't been taken out, well, there is absolutely nothing. We cannot even trade our stop loss to any level. We are just going to let it be. If price is going to hit it, no problems, let's let that go. I can assure you that we have many valid trading opportunities that can cover for that. Let's see the long term. In the weekly time frame, you can see the price is actually reacting off a level of resistance. Okay, that level of resistance in the weekly time frame. Let me zoom in the chart again so you can see clearly. That was the in fact, this was the area right there, fake breakout here, another fake breakout right here. Right now again, price is challenging that zone. You can see the type of candle we had for Friday. Okay, that's another exhaustion. That's a hint that we may be getting a push back down in the sterling pounds against the Swiss franc. So this is actually a good area to look for short opportunities in the sterling pounds against the Swiss franc. But since we have taken our trade, we have defined our loss, where there is nothing we can do. We just let that trade run. Similarly, in the daily time frame, price didn't hit this level that I was watching. If price had come all the way to that level before the bounce, then I would have been more worried. But right now, this is something that will look maybe like this. Okay, from there on we can come back down. So for the sterling pounds against the Swiss franc, we are still optimistic that price is bearish and will be searching for only short opportunities. In the Forex time frame, price is also retesting that level of resistance. Okay, the entry was quite late, just around support area, and of course the bounce. Is trading around resistance zone right now. Well, let's hold the trade. Like I said, there is nothing we can do. If price takes us out, well, we'll take that 3% loss and we'll look for better trading opportunities to cover up. Okay, now you will see this type of price behavior that happened on Friday across many other pairs. Look at the New Zealand dollar against the Swiss franc. Nice push to the downside and immediately back up. Okay, so that type of confusion happened in majority of the pairs. Let's look into the long term of this pair. You will see that price is actually trading around key level of resistance right there. Now, in that key level of resistance for last week, what did we get? That was a spinning top. Spinning top. What's the hint? The hint is that price is exhausted, the bulls are exhausted, and the bears might be bringing price back down. So in the sterling pounds against the American dollar, we should be interested in short opportunities. Now you can also see the price was in a channel and price was trading around that channel resistance as of last week Friday. Okay, so from here on we should be looking for short entries, hopefully to the lower boundary of that channel. Let's see the Forex time frame. Forex time frame. Okay, I will show you what happened in the similar to the sterling pounds crosses. You can see the type of abnormal market volatility we got on Friday. Even though we are more interested in short opportunities, we are going to wait for price to confirm that by coming to the downside. This is not an ideal area to go long. All right, the New Zealand dollar against Japanese yen also suffered the same on Friday. You can see to the downside, then back up. That sharp move up and down caused a lot of confusion. In the weekly time frame, you can see the New Zealand dollar against the Japanese yen. In fact, this is a valid trading opportunity for us. As soon as the market opens, we are likely going to take this trade. You can see that level of resistance, this one again, confirmation. Then look at the candle we're getting, which is an inverted hammer formation, giving us the hint that the next move will be to the downside. So this is a valid trading opportunity for us that we'll be taking advantage of as soon as the market opens. We're placing our order, we'll be taking a trade right there. Now we are bearish and we'll be looking for only short opportunities. You can see this trend line got broken, never retested, went up straight to resistance, and is likely going to come back down again. So we'll set our sell stop order as the market is going to open. We are very optimistic that from here on price should come back down in the New Zealand dollar against Japanese yen. So one valid trading opportunity here. Another pair is the sterling pounds against the American dollar. You can see that abnormal price reaction, sharp move to the downside, sharp move to the upside on Friday. That market confusion was not right for most of traders. In the weekly time frame, we are also getting some spinning top also. All right, that exhaustion sign that price may be coming down. So you need to be very careful hitting on your buy button on the sterling pounds against the American dollar. Now, in the daily time frame, we are getting this. Well, I do not trust this type of candle, and I am not ready to go long in the sterling pounds against the American dollar. In fact, I am looking at price coming back down. So be very hesitant in hitting on your buy button. In the Forex time frame, well, that's the type of similar behavior that we talked about. Sharp move down, sharp move up before the market close. But price is still trading around the trend line, and chances are that will be coming back down. So avoid taking long entries for now. The Australian dollar against American dollar, similar price reaction on Friday. Sharp move to the downside, sharp move to the upside. Most traders, just like we are actually experienced, would have felt some hit on Friday. Now, in the weekly time frame, you can see that price is also trading around a key area right there, where we got here acted as support, resistance there, and right there resistance again. Price is due for a pullback. You really do not want to hit on your buy button against that level. In the daily time frame, well, this looks quite interesting right here. Nice pin bar of that area, but then again, this is a weekly level of resistance. We are not ready to trade against that force that has been driving price to the downside, so we're not interested in that bounce. In the Forex time frame, we are looking at price returning to the downside, so we are not ready to go long in the Australian dollar against the American dollar. All right, let's move on to other pairs. The sterling pounds against the Canadian dollar. In the monthly time frame, the technical analysis here is that price is in an expanding triangle, a sign of market confusion. We have gotten some confirmation, move up, move down, move up. The next move should be to the downside. Well, but quite some hesitation, a lot of hesitation going on for several months right now in the sterling pounds against the Canadian dollar. We are still hopeful that anyhow price will complete that move to the downside. So at this point, we are all ultimately bearish in this pair. We'll be searching for only short opportunities in the sterling pounds against the Canadian dollar. In the weekly time frame, you can also see that price has been compressing. We've had that sort of triangle formation in the weekly time frame. Price confirmed that move, so right now price should be going back down. So we are looking for only short opportunities. In the daily time frame, a bit of some hesitation here as well in terms of the range. All right, so price is right now pushing to the downside. For this week, we are more interested in short opportunities. In the Forex time frame, you can also see that price is actually has broken below a key level of support. So any pullback to that zone, we'll be interested in looking for short opportunities. This is on our radar. We'll be following this very closely, especially in the 30 minutes time frame or even in the 1 hour time frame. So we'll be looking for price to make that complete that pullback. From there on, we're looking for short entries. All right, the New Zealand dollar against the Canadian dollar. Well, this is our bread and butter for this week. This is a valid trading opportunity for us. You can see the price is actually trading around the monthly level of resistance. All right, that's it, monthly level of resistance, and so a good place to look for short entries. And in the weekly time frame, we got a trend line that got broken. I shared this chart with you last week. That's the trend line right there. It got broken. We had the pullback. Right here, the first red candle close. We should be looking for our short entries in this New Zealand dollar against the Canadian dollar. So we'll be sending the signal out as soon as the market opens for us to take this trade. This is a high quality trade, and we have to risk not less than 3%. You can decide to even risk more than 3%, but we will not risk less than 3%. All right. So in the daily time frame, we expect price to come back down. All right, I also saw another interesting price action in the 1 hour time frame, something I think that our entry may be also in agreement. So right there, we expect price to come down in the New Zealand dollar against the Canadian dollar. All right, let's move on to the Swiss franc against the Japanese yen. I am very interested in the type of price behavior that I am seeing in the weekly time frame. Lots of exhaustion there, good signs showing that the bulls are running out of steam to keep driving price to the upside. This candle confirms the fact that for this week we should be seeing a a push to the downside in the Swiss franc against Japanese yen. In the daily time frame, we have a trend line. As you can see here, that's a solid trend line. All right, solid, very nice trend line. Price is trading around that trend line right now. With that candle in the weekly time frame, price is likely going to push below. All right, so if it pushes below, we'll be looking for our breakout pullback reversal move. Okay, so this is a nice one coming, good trading opportunity, and we'll keep searching for valid entries in the shorter time frames. Similarly, the euro against the Japanese yen, I am actually liking this one a lot. You can see that in the monthly time frame, we had analyzed calling for a possibility of an expanding triangle, and this is an optimal zone of resistance for the euro against Japanese yen. As we got this area here coming in confluence right there. In fact, this is an opportunity that we should be taking as soon as the market opens. We are likely going to be trading that candle right there, that reversal candle. So we're hoping that price for this upcoming trading week, we are going to be seeing a nice fall to the downside in the euro against the Japanese yen. So another trading opportunity that is waiting for us to take for this week. All right, so of course we have a trend line in the daily time frame, just like we are doing the Swiss franc against Japanese yen. Our order will be below the trend line, all right, somewhere below the trend line. So before the order is triggered, the trend line would have been broken, and of course we should have some nice push to the downside. Okay, that's it. Let's look into the Australian dollar against Japanese yen. Another one here, that price is trading around some resistance area. In the monthly time frame, you will see that very clearly. Price is actually trading around that resistance zone. Is it going to break? Well, no one is sure yet. I just want to warn here that you should not, all right, don't trade this pin bar here. Don't trade this one. It is happening at a very wrong zone around the monthly level of resistance. Please don't trade that. You can also see that in the 1 hour time frame, we got that abnormal market volatility in the on Friday before the market closed. But then this is resistance. So do not trade the pin bar in the daily time frame. All right, this is happening at a very bad zone, and so we will not be taking that trade. Finally, the euro against the American dollar. We are hopeful here that price will be coming down. We want to see price making some pushes. The exhaustion here is obvious. You can see that. So price may crash to somewhere in here before we can see another bounce, and that is what we have been expecting. In the daily time frame, we have that channel, which is also a confirmation that price is due for a reversal. So we might have price come down, push up, then to this area again, from there on back up. So be very careful while you hit on your buy button. In the very short term, we'll be following price here. You can see that we have some sort of move, all right, sideways price behavior. We may have a breakout, pullback, continuation move. So these are very high quality setups that are coming in the future. Don't you worry, just keep trading. I can assure you that we will remain very profitable in the future. Thanks for watching. If you have questions or contributions, please feel free. Discuss them in the Telegram channel, and we'll be very happy to also share our ideas. This week is going to be a profitable trading week. Wishing you the best. Just stay with us, take the signals as they come, and of course we will count our results in the weekend. Thanks again. Talk to you soon. Bye bye.